Okay, this is the point where we are. I did want to continue in the other video, but it was getting really long. But don't forget that whenever you're dealing with assets, straight away in your investing activities, do include proceeds from sale. And we already used that amount here, and it was already given to us. This is going to be really small, I'm sorry, but that's 300. It's going to bother me. Let me just do the work. 324,000. Okay, here we are. So don't forget to include that straight away. So proceeds from sale are fixed assets. You can write fixed assets if you want. Okay, and that's investing activities. Next, they want the entries for financing activities. And whenever we're dealing with financing activities, we're going to deal with one, the proceeds. Whoa, what happened? Why does it look weird? Okay. Proceeds from share or from issue of share capital. Okay, so that's going to be the first one right here. And after that, we're going to look at, that because we've spoken about shares many times now, we also had the repurchase of shares. And here they just want to see if you know what entries go under financing activities. And when we talk about financing activities, we are talking about shares. And we already calculated all these amounts. We already know that, if you look at our note, if you look at our note, which is here, we know that this is the amount we receive for share issues. So that's pretty straightforward. And then the repurchase of shares, we are not going to use the average share price for that. We're going to use the actual amount received now because, in the cash flow statement, we only talk about actual cash. And that was the actual cash that we got. So I know it's very confusing when to use what amount, but just think about it carefully and it will slowly start to make sense. A repurchase goes in brackets. Okay, and we're almost done. Whoa, this was very, very quick. This was a very quick question. So, okay, we're looking at cash and cash equivalents, the opening balance and the closing balance. Now, the opening balance, let's look at our details, okay? Here's cash and cash equivalents. Here's the end of the year, and here's the beginning of the year. But don't forget that bank overdraft is a component that is included here, okay? So we have to take this into consideration. We have to remember that, hey, okay, this wasn't looking too great, and it's not only the positive amount. So actually for the opening balance, we need to say it was a negative bank overdraft and a positive 2,500. And we have to take both those figures into consideration, okay? And then eventually, if we calculate that, we realize that our opening balance was actually a negative 62,600. Okay, so this should be your opening balance amount. And then for our closing balance, it's pretty straightforward because that's given to you. There's no bank overdraft. There really is nothing else you have to do there. So here we go, 23,400. Okay. And now for the net change in cash and cash equivalents. And I don't know why this confuses students. It's okay. You need to figure out what amount do we need to affect this amount with in order to get this. How can we end up with a positive 23,400 when we had a negative 62,600? And the only possible way to do that is to add, so you have to work backwards, is to add 86,000. Okay, guys, wow, that was so quick. Here are all my amounts and what they look like. I hope you're okay. Um, so those were the notes. That's everything we did. Um, and then I know a student asked me, actually last night when I was looking at the question, I realized why this was confusing, but they're just telling you that, you know, there's more information, but that was a different question, so I didn't send it to you. And okay, you know what I'm going to do actually in the next video, because I do believe you could see this. I'm actually going to calculate this for you, even though we're not doing ratios, just so you can see what it looks like.